Let's get to the first corporate, though, on the show before we get back to our chat with Devin. Home First Finance is the first corporate on our radar. The healthy business momentum continued for the company in Q4 due to customer acquisition, dispersals, as well as assets under management. They all surged, though the cost of funds remains a little bit elevated, which is impacting the margins. We have with us Mr. Manoj Viswanathan, the MD and CEO of the company, who joins us on the show. Hi, Mr. Viswanathan. Good morning, and thanks so much for joining in. Well,
Hi, good morning.
Growth for the past year was very, very good. I recall you telling us that you can do around 30% odd. You've done a little bit more than that. For this year, that's for FY24, what kind of an AUM growth are you looking at? And also on the margin front, NIMs have come down towards that 6% odd mark, 6.1%. Further pressure on NIMs from here, or do you think you can hold on to that? Give us a broad range we should work with on NIMs.
Sure. So let's start with NIMs. I think a very small NIM compression was expected this year because this was really a one-off year when we had multiple increases in rates. Thankfully, we run a floating rate book. So we were able to pass on that increase to customers. However, it looks like we are at the end of the increase cycle, and hopefully it should be better going forward. But we have managed to very well maintain the NIMs. So if you look at the whole year, we have been able to manage NIMs. Actually, the NIMs have gone up compared to last year. So it's at 6.4% for the entire year. So that's on NIMs. Coming to growth, yes, we have been working towards a 30% kind of a growth rate year on year. If you see, our disbursals have reached 3,000 crores, which is almost a 48% increase over the previous year. And this disbursal momentum should help us, reach a 30% growth even this year.
The base is small, right? I mean, so the growth numbers can be, relatively speaking, to other players in the mortgage finance business. Manoj, hi, good morning. So that's the excitement with investors when one speaks to in your company that you can do this 30-35% growth for a number of years to come. Is that how you're looking at things as well?
Yeah, that is how we are looking at it. So 30%, it could be 30%, it could be 35%. I think what is more important for us is to build a solid foundation so that we can keep growing at a decent pace for a long time to come. So that's really what we're working on. The 30-35% will follow through as a result of that.
Okay, 30-35% is something that you're looking at in terms of AUM growth going forward. That's a sustainable AUM growth even in FY24. Is that correct?
That's right, because you can see our disbursal momentum is at 3,000 crores.
Yes.
So, with that kind of momentum, we should be able to reach those figures.
Okay, got it. So I'm trying to understand, if there's a big surge in customer acquisitions, any kind of expansion plans that you're looking at, and if yes, any geographies and areas that you're looking to expand into, what could the, the plan look like about 2 years out?
The expansion is centered or focused on the large affordable housing markets. Affordable housing as a product actually is comes up in more industrialized centers. People who are migrating from smaller towns or smaller villages into larger towns for looking for work. I mean, they are the ones who are, creating the demand for affordable housing. So our focus is also on, tapping these centers. Metros, the periphery of the metros, periphery of smaller, smaller towns, etc. And so our expansion is focused on the states where we are currently present, which is we are present in 13 states in the country at the moment. And these 13 states account for a predominant part of the affordable housing demand and as well as the GDP. So these 13 states account for about 70% of the country's GDP. And so these are the states we are focused on. It's largely in the west and in the south, more industrialized states, more urbanized states like Gujarat, Maharashtra, Tamil Nadu, etc. And so we intend to go deeper in these states and cover the entire state. I mean, that is our first aim. Post that, we are looking at, some of the states in the north, which is MP, Rajasthan, etc.
Sure. So if you go deeper into these states, I'm assuming, not just tier 2, tier 3 cities, but a lot more rural. Do you think there's a possibility of your asset quality getting hit in the near term as the expansion plays out? And can you give us an outlook on what the credit costs could be in FY24?
Sure. So when we say go deeper, we are not really talking about rural markets. That's a totally different segment. We are talking about more of emerging urban markets. I mean, the smaller towns which are becoming larger, some of the new towns that are developing in and around, the satellite towns that are developing in and around the larger cities. So these is really our mainstay. I mean, we are not really going rural. And so we don't expect any deterioration in credit quality. The credit cost this year, we ended with about 40 basis points. We should be in the same ballpark in the coming years.
All right. Manoj, quickly before we let you go, I just want to confirm the NIMS number from 6.1%. Where do you see that number headed? It'll stabilize at these levels?
6.1 and thereabouts is we should be able to manage. And it all depends upon how the interest rates move.
Okay, all right. And, final question then before we let you go. You got a large shareholder in there. We asked you about this last time as well. Every now and then there's a bit of a rumor that Warburg wants to exit their holding. Have you heard from them with regard to what they want to do with their holding, or no communication whatsoever? They want to hold on?
No, they're a recent shareholder. They came in, just 2 years ago. So we expect them to hold on for some time to come.
Manoj, just one last point. Now home loans are a pretty safe product in the overall spectrum of sort of products in the financial space. But obviously, I mean, we've seen accidents in this space as well at other institutions. What's the risk? I mean, the growth potential is there. As interest rates come off, I mean, you will benefit. So growth perhaps should not be a problem. Briefly, if you can tell us, I mean, is any risks at all on the asset quality side, or that is completely...
No, it's a secure product.
Safeguarded.
Yeah, it's a secure product, and I think it's all about, having a very calibrated growth. So hiring the right people, giving enough time for training them and for them to settle down, and for the organization to kind of build up its foundation. So we are expanding at a pace that we are comfortable with, which is why we said, I mean, we could probably grow at much faster than what we are growing, but we said that we'll keep the growth at about 30% per annum. So it's all about calibrated growth and planning and executing.
Okay, got that. Manoj, appreciate your thoughts. Thanks a lot for joining in and speaking to CNBC-TV18. That's Home First Finance, looking at a 30 to 35% growth in their AUMs over the next couple of years. So that's a sustainable growth rate. And they're looking at the large affordable housing market, which is growing at a pretty strong pace.